Feeling a bit lost in the market's ups and downs? It's true, things can seem chaotic right now. Investors are nervous, unsure where to put their money as headlines scream about economic slowdowns and rising costs. But what if I told you that these very moments of uncertainty are often when the biggest fortunes are made? Wall Street is currently buzzing about the Magnificent Seven, those big tech companies that have been leading the way for years. But according to the investment guru Cathie Wood, the real opportunities lie elsewhere.
Well, you have to consider the source when I talk about investing a 10K today. Most advisors, you should probably listen to them, would say be well diversified. If you're very young, then I would add to that, take more risk than what you see in the broad-based benchmarks right now. Buy into some of the more innovative strategies that have been really hurt by a market that has crowded into just a few stocks like the Mag 6. There are so many exciting opportunities out there.
Her belief is that true wealth is built by looking where others aren't, in those overlooked areas of innovation, in sectors that have been unfairly hit by market shifts, and in groundbreaking technologies that the mainstream market is currently ignoring. So, if you've got $10,000 ready to invest, should you just follow the crowd into those popular, potentially overpriced stocks? Absolutely not. Cathie Wood argues that today's market dip isn't a problem, it's a chance. Putting $10,000 into the right place now could grow many times over in the years to come. History shows us that the biggest rewards come not from following the pack, but from making smart bets on the future before everyone else catches on. And that's exactly what we're going to explore in this video. We're going to dive into 3 stocks that are currently being overlooked companies that have seen their share prices drop recently, but have the potential for massive growth as their industries take off. These aren't your typical well-known stocks. These are the next generation of game changers ready for significant growth. But first, a quick favor. Please hit that like button, share this video with anyone who might be interested, and make sure you're subscribed. Let's aim for at least 300 likes on this video. It would really help out my channel. First up is a stock that's been quietly working behind the scenes, yet it's positioned to be a major beneficiary of the AI revolution, Celestica Inc., trading under the symbol CLS. While Wall Street is busy focusing on the usual big names in tech, Celestica is quietly building the infrastructure that powers AI, high-performance computing, and the next wave of networking technology. Celestica might not be a household name, but its growth numbers tell a compelling story. Did you know that Celestica was initially a division of IBM? In the fourth quarter of 2024, their revenues jumped by 19% compared to the previous year, reaching $2.55 billion, with their connectivity and cloud solutions segments soaring by 30%. Even more impressively, their high-performance systems business, driven by the demand for AI data centers, shot up by 65%. This isn't just steady growth, it's a clear indication that Celestica is riding the biggest technological wave of this decade, and it doesn't stop there. For 2025, the company is projecting $10.7 billion in revenue, an 11% increase, while earnings per share are expected to climb by 22% to $4.75. This kind of earnings growth, combined with a forward PE ratio that's 20% lower than the industry average, suggests that Celestica is still undervalued given its potential. The market might not fully grasp it yet, but Celestica is becoming a crucial player in the world of AI computing and networking. With the demand for faster networking switches set to explode and AI-driven cloud infrastructure becoming essential, Celestica is deeply involved in this transformation. And here's where it gets really interesting. The stock is still significantly undervalued despite these positive trends, with some valuations suggesting a potential upside of over 40%. Celestica is a perfect example of a high-growth, under-the-radar AI stock that's poised for a major reevaluation by the market. This is precisely the kind of opportunity that Cathie Wood looks for, a stock that the market has overlooked but that has the fundamental strength to multiply in value. Now, let's talk about the second stock on our list, one that has been unfairly punished by the market, yet it holds the key to one of today's most profitable industries, digital advertising and AI-driven app monetization. I'm talking about AppLovin Corporation, trading under the symbol APP, a stock that has seen a dip in recent months but now presents a significant buying opportunity. The company's latest earnings were much better than expected, with fourth quarter revenue soaring by 44% year over year to $1.37 billion, and adjusted EBITDA skyrocketing by 78% to $848 million, resulting in a 62% profit margin. And yet, despite these fantastic results, Wall Street isn't giving AppLovin the recognition it deserves. So, what's behind this growth? A major strategic shift. AppLovin has been actively transforming itself from a mobile gaming company into a pure-play advertising powerhouse. The company is reportedly selling off its gaming unit for $900 million, which will allow it to focus entirely on its high-margin AI-driven advertising platform. This change is already paying off, with advertising revenue surging as the company continues to improve its AI-powered marketing tools designed to help millions of businesses optimize their ad spending. And here's the exciting part. While analysts have been slow to update their forecasts, AppLovin's growth is outpacing expectations quarter after quarter. Management is projecting $1.4 billion in sales for the first quarter, while the market is still expecting less. With its AI-powered platform attracting millions of businesses, improving ad targeting efficiency, and driving superior monetization, AppLovin is set to dominate the future of digital advertising. And yet, after its recent drop, the stock is trading at a PEG ratio of just 0.88 times, a clear sign that it's undervalued relative to its growth potential. Major institutions like Bank of America are still optimistic, with price targets as high as $580 per share, a significant upside from current levels. This is exactly the kind of stock that smart investors buy when the market is acting irrationally, one that's poised for a strong recovery and significant gains as its AI-driven ecosystem expands. And finally, the third stock on our list is one that has just secured a huge deal that could reshape its future, yet the market has barely considered its potential. I'm talking about Allot Limited, trading under the symbol ALT, a cybersecurity and network intelligence company that's been quietly gaining momentum, securing major partnerships with telecom companies, and transforming its business into a high-margin, high-growth operation. Let's look at the numbers. In the fourth quarter of 2024, Allot became profitable, generating $4 million in free cash flow and delivering a 50% year-over-year growth in its security-as-a-service business. And the biggest catalyst? A game-changing partnership with Verizon. This isn't just any deal. It expands Allot's security platform from serving 1.5 million Verizon business subscribers to a staggering 30.5 million. That's a 20-fold increase in its addressable market overnight. The key here is zero-touch cybersecurity. Allot's cloud-based security solutions integrate directly into a telecom provider's network, offering seamless protection to millions of users without requiring any downloads or installations. And Verizon isn't the only partner. Vodafone is also rolling out Allot's security solutions across its networks, opening up an even larger global opportunity. But here's what makes Allot a potential goldmine. Its software-as-a-service business scales incredibly well, with operating margins expected to expand significantly as more telecom giants integrate its security offerings. The company is projecting continued high double-digit cost growth in 2025, with long-term revenue projections pointing to significant upside. Yet, despite these positive trends, the stock has recently pulled back by over 40% from its highs due to technical factors and profit-taking. This is a classic case of short-term noise overshadowing long-term potential. And the upside? Huge. Analysts see potential for triple-digit gains as Allot capitalizes on Verizon's rollout and expands its reach with new telecom giants. For those looking for a hidden cybersecurity gem that Wall Street hasn't fully caught on to yet, now is the time to get in. So what does this mean for investors? Each of these companies is currently being overlooked, but they hold the potential for big gains in the years to come. If you found this video helpful and want to stay updated on more stock picks, make sure to like, share, and subscribe. Your support helps this channel grow and keeps me bringing you valuable content. Thanks for watching, and I'll see you in the next video.